Hello traders, welcome back to the channel. This is Vishal and you're watching Weekly Sectoral Analysis. Now in front of you we have the Nifty spot chart. On the left hand side we have the daily chart and on the right hand side we have the weekly chart. First let's have a look at the weekly time frame chart. What we can see that prices have just trying to come out of the dual moving averages. But if you check properly, although the prices are trying to come out and trying to start a new uptrend, we have this trend line which is holding on since March 2020, and over here we had got a pretty good breakdown. All right, after this breakdown prices are going back and they're trying to retest this particular trend line, and within this zone I'll just try to highlight this zone somewhere over here is a stiff resistance for Nifty. The reason for that is we have couple of candle wicks over here in the zone of 19,850 and this 78.6% Fibonacci retracement at 19,931 and this trend line. So from 19,900 till 19,850, this entire zone is a stiff resistance for Nifty spot in the weekly time frame chart. And the same thing, if you check in the daily time frame chart, we can clearly see that in so far over here, Nifty was trying to go up, then it tried to consolidate, the trend went flat from the downtrend, and then suddenly in a matter of 2 to 3 days, there was a sudden spurt in the Nifty spot. Now, when this prices went up, the candles which have been made over here, if you check properly, both of them are inverted hammers or shooting stars. Now, this is also a result due to the recent resistance over here, this particular zone. There is also a gap over here. So you can see this entire zone is giving stiff resistance to Nifty spot. And the way markets have gone up recently, I always say that a vertical rally generally doesn't sustain. So if Nifty spot wants to continue to go higher, it needs to consolidate first. Probably it needs to come down and then start going up. Exactly what's going to happen, I'm not predicting it. मैं ये प्रेडिक्ट नहीं कर रहा हूं कि मार्केट पहले नीचे आएगा फिर ऊपर जाएगा. But if it consolidates, if it comes down a little bit, if it retraces and then if it goes up, I would say that then that particular new uptrend, new breakout will be healthier, because generally one way move never sustains in a rally. Okay. And again, if you see that there is a stiff resistance over here, so if this particular level wants to be broken, just like a rubber band effect, आपने कभी rubber band को देखा होगा, जितना ज्यादा आप पीछे खींचोगे उतना ज्यादा वो आगे जाता है. So the more prices come down and then if they go up, then the chances of this resistance zone breaking will be slightly higher. Okay, let's have a look at Bank Nifty. Now, if you try to look Nifty and Bank Nifty, you would clearly say that Bank Nifty is looking a lot weaker than Nifty spot. Obviously, one of the reason is this particular resistance band, okay, which is within, I would say, 44,696 till 44,463 or 450 in terms of round figure. Now you can check over here that the trend in this zone was flat, tried to went up, but not even a single green candle was able to close above the dual moving averages. And the reason for that was this zone. This zone over here, you can see a lot of zigzag movements happening in the candlesticks. So this is giving stiff resistance to the price. And this area I have highlighted in the weekly time frame chart by this particular channel. Okay. So you can understand that prices have hit a resistance band and now they're trying to come down. I guess over here, again, we have some sort of supports from 43,500 till 43,000. So this entire zone is a decent support band. Now, whether this will be broken or not, it's very difficult to say, especially the way when PSU Banks open gap down, the way SBI has opened gap down, it's looking really scary. But let's hope that this support doesn't break down. If this support gets broken down and if we see a big red candle closing below this, then you will see some serious selling happening in banking stocks. Now looking at PSU Banks, you can see that weekly chart is looking very haywire. Like we have a hammer, then a small green candle, and then again an inverted hammer. So it clearly shows a fight between bulls and bears. This is the first thing. Second thing is over here prices are nicely going up and sudden gap down. anything what happens in the market all of a sudden like gap up or gap down. I'm not a very big fan of that. Now let's have a look at the PSU banking stocks. Okay, so if you have a look over here, see the way PSU banks में जो SBI किस तरह से खुला, it is the king of PSU banking stocks. See the way it has opened, really scary. Then if you have a look at PNB, and PNB is looking much stronger. If you have a look at Bank of Baroda is not looking very good. If you have a look at AU Bank is looking slightly better. So what is happening is in PSU banking pack, there is a mix match. Like smaller stocks are looking slightly stronger. Bigger stocks like SBI are looking weak. But you know, every trader has a way of thinking of his own. Okay. And I am a person who tries to concentrate on the heavyweight stocks. If the heavyweight stocks of that particular sector are not doing well, then I will not be very much encouraged to trade in that sector on the bullish side, because ultimately जो sectoral indices का chart होता है, the sectoral indices chart is governed more by the heavyweight stocks. So as of now, I would slightly wait and not have any view in PSU banking stocks. Yes, they're looking weak, but whether they are going to go down further or not, only time will say. Especially the SBI's जो stock है वो ज़्यादा weak लग रहा है, without any doubt. Private banking pack, again you can see there is a trend line, the resistance over here. We had a breakdown, prices rebounded. Now they are finding a resistance from this particular trend line and these candle wicks, and same thing, same story what we saw in Bank Nifty. This same zone is providing resistance. Prices are trying to come down, and if we manage to close below this zone, this entire zone is a decent support, then we'll have some serious selling pressure visible in the private banking stocks. And three stocks which are majorly responsible for this selling are HDFC Bank, Kotak Bank, and ICICI Bank. I'll just show you the charts so you will be able to understand why I'm trying to say that. See this, see Kotak Bank. See the way it is going. Down, up, down, up, down. Again, we can see negative candles. So if we break possibly the level of 1728, 1725, again, you will be able to see some selling pressure visible over here. Check ICICI Bank. ICICI Bank also is right now looking no good. Even HDFC Bank. We do have a green candle over here, but overall state of trend is again no good. All right. So even private banking stocks are not doing that great. Energy pack is looking pretty impressive. The way recently prices have rallied, special thanks to BPCL, HPCL, and IOC. And even ONGC has been able to rally at some level over here. But HPCL and BPCL were outstanding. See the way they have rallied one way. See BPCL, right? And again, IOC. So I guess in these stocks, if anyone has missed this rally, it's not a very good time to jump and buy these stocks right now because the prices are inflated. But whenever we have a consolidation, whenever we have a price correction, and when these stocks are available at a cheaper price, at that point of time, obviously we need to reanalyze the charts, and again, we can take a re-entry as a swing trader at a lower level. But yes, we will have to reanalyze the chart at that level, because kabhi kabhar kya hota hai, when prices come down, at that point of time, if the overall uptrend in the Nifty is not existing, then it makes no sense to go long in some of the stocks. All right. But you can surely keep these three stocks in your watch list and enter them at the right point of time, not right now. All right. So let's have a look at the metal pack. Now, metal pack, I should say, it's very strange right now. What is happening in the metal pack is, see, first thing is, you can see this swing. Prices came down and they took support at 161.8% Fibonacci extension. Prices rebounded. Okay, and we could see a decent positive divergence in the RSI and in the price. There was a pretty decent pullback. This pullback actually should have, ended up much earlier. इतना steep pullback नहीं होना चाहिए था. This pullback is way more steeper than what I had expected in metals. Okay, and frankly speaking, it's not necessary every time what you expect in the market should react in the same way. Market can go against you. So now as a trader, you have to adjust your entire analysis as per the movement of the market. The rules don't change in the market. Your view should change as per the movement of the market. So as of now, what I can say is in the daily time frame chart, there are not much bullish signs visible, because these three candles which are visible over here are not so encouraging for the bullish traders. Neither they are discouraging for bullish traders, because we don't have a lot of negative candles. We don't have a breakdown over here. If I can say that I can see a very big red candle over here, then I would say as a swing trader, okay, this seems encouraging for a person who wants to go short. But वो भी वहाँ पे visible नहीं है. And if you have a look at the weekly time frame chart, it seems that it's not that great, but yes, things are trying to improve. So possibly in the next week, in next 2 to 3 days or 4-5 days, we'll be able to see that whether this particular sector is just giving a small pullback and then again it will resume its downtrend, or whether it's ready to give a new breakout for positional traders and make new highs for stocks. Okay, so I guess let's wait for a few days and we'll find out. Autopack. Now, Autopack was really surprising, because Autopack, I had clearly said in my previous weekly sectoral analysis that it was showing signs that the Autopack is getting tired and it needs to consolidate. It needs to come down. Some sort of profit booking should be very much healthy for the overall sector. But what happened? Prices did correct it. It also made, you can say some sort of impression that a double top is forming up. I generally don't trade patterns, but if you see this formation or something, it's trying to form a double top. But this particular support was not broken. And we had a very good steep rally on the upside. As of now, there are not many stocks where I'm a very big fan of going aggressively long, but one stock which I can see right now is not doing anything. It's not performing very nicely in the daily time frame chart, neither in the weekly time frame chart. It's looking that great. But what it's trying to do is, it's trying to bounce back from a very good support. Okay, this is a very good support. You can see a lot of zigzag movement over here. It's trying to bounce back. Okay, but it has not given a breakout. If it manages to close above, say, 184 or something with a decent big green candle, then we'll be able to see a decent bullish trend on the upside for positional traders. I'm not talking with a view of swing traders. But from here itself, if we see the selling coming up, then your thoughts that I want to go long in that particular stock will be proved wrong, because the stock ऊपर नहीं जा पाएगा, नीचे आ पाएगा, नीचे चला जाएगा. So you will have to react only if the stock rallies. Otherwise, no. Let's have a look at financial sector. I guess financial sector is doing okay in the weekly time frame chart. In the daily time frame chart, we can see things are not looking that great. Again, if we break below 19,170, 19,200, then further weakness will be visible in this particular sector. Okay. Consumption pack, even this sector was not actually ready for a very big rally, but it has surprised me. Pretty much it has surprised me, and the reason for that is this particular Fibonacci extension. Prices came down, took a support at this Fibonacci extension, and there was a steep rally over here. So I guess if these prices correct, consolidate, come down at a cheaper price, then possibly as a swing trader, you might be able to fancy your chances in some of the other stocks in the consumption pack. FMCG sector. Now, FMCG sector, if you check the daily time frame chart, it has been consolidating for a pretty long time, very long time. And again, you can see this uptrend, small uptrend, corrected, took a support at this 127.20% Fibonacci extension. It's trying to go up, and see this candle, it's trying to give a breakout. So we will need a breakout above possibly 53,080 or 53,100, and the responsibility of the sector obviously lies on the shoulder of ITC. So we will need ITC to close at least above 460, 461. It's much higher from what it is visible right now. I know it's at 439 and I'm talking about 461, but the sectoral indices is showing somehow some positive signs. So let's wait and watch and see what happens in the next few days. If ITC gives a breakout, then maybe the entire sector will see some firecrackers. Infra pack again, it has gone up tremendously. It was a very good time for swing traders. And again, if these stocks, I'll just try to share a view on one of the stocks. Just give me a moment. Yeah, here it is, Grasim. Okay. Now you can see that Grasim, what has happened over here, went up, suddenly it came down, and suddenly it's trying to go up right now. Now this level, if you see, this particular level, 1989 or 1990, if we see a pretty good close above this particular level with a big green candle, then you will be able to see this stock rallying much, much higher from here. And talking about the sectoral indices, I guess even CNX Infra was looking pretty much overstretched. You can see higher highs visible in the price, lower highs in the RSI. So this was pretty surprising, but I guess price took a support at 23.6% Fibonacci retracement and it tried to rally. That's it. Again, if the prices come down, if they are available at a cheaper price, I guess swing traders should keep a watch on it. But apart from Grasim, I would not be very, very keen on initiating positional trades in the infra part. IT. Now, IT was one of the weakest sectors when it collapsed over here. Even when it started giving a pullback, it seemed that it might give a pullback at some level, probably somewhere till here and then start coming down. But the way it has rallied in the last 2 days, I don't know what are the news or what is happening in that sector. But the way it is rallying, it seems that something big is happening. And I guess positional traders especially should keep watch on this sector. But just one thing, if you're buying any stock for a positional trade in this sector, be open to high volatility. What I mean to say is when generally prices shoot up with a very fast movement, generally prices shoot up gradually. They'll go up, they'll consolidate, they'll come down, again they will go up. But right now what is happening is just in 2 candles, the entire movement is over for the last 2 to 3 days. So generally after this sort of movement, when we get a breakout or when we buy stocks, you should expect volatility that after buying, if it goes up consistently, fine, you are lucky. If it does not, then it can come down first. It can come down first, it can consolidate and then it can go up. These things can happen. I'm not saying they will happen. ऐसे हो सकता है, मैं ये नहीं बोल रहा हूँ ऐसा होगा ही. So be ready to volatility. But some of the stocks which you can concentrate on as a positional trader, one of them is possibly Emphasis. You can have a look at it. But yes, इसमें volatility आपको ज़्यादा मिलेगी. One more surprisingly will be Infosys. Yes, Infosys suddenly is now looking decently strong. This gap also has been filled over here. Small gap was there, very small. It has been filled. One more stock which you can have a look at is also TCS. Yes, I can say that the candle over here is not very, very encouraging, last 2 candles, but you can keep a watch on this particular stock. And one more is Tech Mahindra. So 3 to 4 stocks in this particular sector are looking encouraging. But again, I'll repeat, you should be open to volatility. Okay. Pharma pack. Now, Pharma pack, again, it is one of the sectors which actually needed some serious amount of consolidation and correction. You can also see that it closed below the support, but after closing below the support, it suddenly started rallying on the upside. Now, as a swing trader, whoever has gone long in this sector would have made money. But one of the stocks I would just like to share with you is Dr. Reddy. Now, Dr. Reddy is a stock which has not rallied that much. If you see Sun Pharma is one of the stocks which has outperformed every other stocks in the recent rally. Not the entire rally, but the recent short-term rally. But Dr. Reddy is one stock which has not been able to rally that much recently in the short term. So as a momentum trader, as a swing trader, as a positional trader, you can keep a watch on this particular stock. All right. PSU pack. PSU pack, I can say that it is extremely overstretched. You can see multiple negative divergences, but still at times when the trend is very, very strong, they'll keep on, going up higher. Even the daily RSI is at 77.78. As a trader at this price, I would not be very keen to enter this particular sector. But if it consolidates, if it comes down, and if they're available at cheaper prices, as a swing trader, I'll start looking at these stocks for sure. Realty pack. Now, realty pack is one of the strongest sectors over here. It has rallied pretty nicely. As a swing trader, I would surely be trailing my stop losses very, very aggressively, especially in one of the stocks, which is DLF, which is the leader of realty pack. And if you just see the way it has rallied, has been just one way. I guess as a swing trader, you should continue trailing your stop losses very, very aggressively. And if your stop losses are getting hit, come out of it. If the stop losses don't get hit, till the time the rally is continuing, just be in that rally, your profits will keep increasing day by day. Okay. Mid-cap index. Mid-cap index is also one of the sectors which actually needed a serious correction. But what happened? It broke the support, came down, and suddenly it rebounded pretty sharply. So as a trader, I can say that the mid-cap index in the daily time frame chart is in an uptrend. Again, whenever they will correct, consolidate, come down, and they're available at cheaper prices as a swing trader, again, I'll start looking back in those stocks. And again, summing it up all, I guess it's not a time when the entire market is ready to move up pretty strongly, because the main sectors over here, the banking pack, the PSU banking pack, the private banking pack, they're not ready to go higher. So as a trader, you need to, little bit, be careful before you initiate trades. In sectors like auto, you will see not all the stocks are very, very open for a big rally. Only few are there. IT is an exceptional, you can say, sector where a lot of stocks have suddenly started to giving breakout. Metal pack is again wait and watch. So it's not a time where the entire sector is ready to go up. So you'll have to be very, very careful, very patient, and maybe in the next 4-5 days to 10 days, I guess the stage will be set whether the market wants to go higher or whether it wants to, just come down. And this was just a Diwali rally, and then again we'll have the slump in the market on the downside. I guess in the next 5 days to 10 trading sessions, you will be able to understand. So have patience. Just try to understand what markets are trying to do and trade less, but trade wisely. Thank you. Stay safe.